It's exciting to be, moderating this panel today. I'm excited for this conversation. Happy Africa Day to everyone. We do have quite a strong, caliber of panelists today. I can see, Dr. Babatunde has this video on. If you will, please, thank you, Jacqueline. I think Lebo is also on the call as well. Hi, Lebo. So I think we're missing Alex, and also let's see. Yeah, we are missing Alex and Noha, but that's okay. We would get started with the panel, and if they do join us, in the midst of it, we'll be happy to have them. Very nice to see all of you. I guess just I'm going to give a brief introduction, and we're going to kickstart the conversation. So hi everyone. Today we're delighted to have three of the leading voices on fintech across the continent, really. So we have Dr. Babatunde, who is the CEO of the FinTech Association of Nigeria. He's a fintech enthusiast, and he has experience, spanning across the banking sector, the non-bank financial sector. He started his career in First Bank of Nigeria, and he's worked in various banks. He also serves on the board of various fintech companies as well. We have Jacqueline on the call. Hi, Jacqueline. Jacqueline is a transformation specialist in DFS, so that's Digital Financial Services. And she's worked across Africa, across Asia, supporting the deployment of inclusive digital financial systems for economic growth. And she's currently also a digital payment technical expert at Africa Nenda, which is an initiative of the Rockefeller Philanthropy Advisors. She's involved in developing inclusive digital economies in Africa and supporting deployment of affordable payment systems. She also works across the ecosystem to strengthen gender equity and equality. And we also have Lebo as on the call as well. Lebo brings more than 15 years experience building digital financial solutions across the continent. She's the executive director of FinTech Women, and she's also a non-executive director at a Pan-African insurance company, and led growth and expansion for FinTech startups. She's held director roles at Visa, Gemalto, Standard Bank, and she's also led digital innovation workshops with banks and mobile network operators across the world. And she speaks regularly in fintech, entrepreneurship, and financial inclusion. So thank you all for joining, and I'm excited to have this conversation. And I think maybe a good place to start would be you all have you work across the continent, but you're all sort of domiciled in different parts of the continent. Do you want to maybe start by giving the audience a very brief overview of what the fintech landscape sort of looks like on your part of the continent? So I'll start with Lebo.
Okay, thanks, Victor, and good afternoon. I guess good afternoon to everyone on the panel as well as in the audience. Your question about the fintech landscape in South Africa. Currently, what we're seeing in South Africa, that you're having a lot of different players playing in the space. So yes, there's financial institutions playing in the space, but you also have mobile network operators playing in the space, the likes of MTN and Vodacom, which is, I guess, common across the continent. But I think what's different here specifically is that you're having a lot of retailers now offering digital financial services, the likes of ShopRite, Checkers. They have a financial services product essentially enabling domestic remittances as well as cross-border remittances across Southern Africa. And that's grown quite significantly because it's affordable. It's an affordable product. as well as the distribution of the retailer is in the areas of the low-income consumer. So retailers are starting to offer digital financial services, but even for the urban consumer, retailers such as Woolworths, are also looking at different financial services products. You also have insurance companies. So insurance companies such as Discovery and neobanks and digital banks. Discovery has launched the Discovery Bank, and really they are leveraging their data and consumer behavior to offer financial services to consumers, and really a financial services product around their lifestyle. So that's what you have here. And then InsurTech, you're having a large growth of InsurTech companies now, Pineapple, Lemonade, and different InsurTech companies in South Africa, but even InsurTech for the low-end consumer and underserved communities. So I sit on the board of OMART, which is Old Mutual Alternative Risk Transfer. And essentially what they do is offer InsurTech startups a cell captive license to offer insurance to underserved markets, but also alternative insurance. So, for instance, insurance for consumers that may have HIV as an example, so different products, like Different Life is an insurance product that offers insurance for people that have HIV. So you're seeing a lot of different players, financial services as well as non-financial services offering financial services. I think that's the what you're seeing in South Africa. Yeah,
that is super interesting. I think at the end of the day, any sort of service that, any service that has a quick, frequent touch point with consumers, there's an opportunity to offer financial services, because financial services touches, every aspect of our lives. That's interesting to see. Retailers are starting to offer financial services on the continent. Financial services used to be a thing where you need to have a bank, a bank, and you had to do, or a big financial institution. But today it's interesting, the dynamic of from centralization to decentralization to this model. Interesting. How about Babatunde? Do you want to give us a little bit of overview of what the fintech landscape looks like in Nigeria?
Okay, thank you, Victor. It's a pleasure to be here. So, but the landscape in Nigeria is what you use is exciting right now. So we have the guys in the payments. We could say boldly that we're one of the best payment infrastructures. So, which allows everybody else to ride on that. So we have close to about 250 fintechs. And right now for us at the association, although we call FinTech our association, it's about a platform that brings together everybody within the space, including the verticals. So we have the insurtechs, the agri-tech, ed-tech, health tech, and all the verticals playing a role because they can ride or leverage on the payment infrastructure that exists. So we have, so it's quite an interesting space, and we expect, and of course we have the blockchain players, and now with the regulation for digital assets released by SEC, we expect to see more interesting things happening in that space. Even with P2P transactions, we're seeing a lot of interesting things. So now that it's going to be official, you can operate legally, we expect to see more interesting developments happening within the fintech space. So it's been quite an exciting space. And now that we also get the telcos coming into the space as PSB banks, so the competition is getting very, 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 very exciting.
Absolutely. There are reports that African startups raised more than $5 billion last year, and it seems like Nigeria is getting a huge chunk of that. And when you even look within the pie of that, fintech is more than half of the funding that's coming to the continent. It's certainly very exciting. Just in the span of a couple of years, the unicorns that we've had are mostly payment companies. And Nigeria is definitely taking the charge there. Awesome. Jacqueline, do you want to paint us a picture of the landscape?
Okay, I would have chosen any other market in Kenya. I mean, in Africa, but I'm obviously biased because I come from Kenya, so I would speak to what is close to my heart. In terms of the fintech landscape, it majorly looks as what my colleagues have spoken about in terms of the mix in the type of entities and the verticals in the types of solutions that they're offering. I would just like to point out that Kenya is known as a fintech innovation hotbed in Africa, because largely various different types of technologies have contributed a lot in terms of inclusion, from around the time when Kenya was at 26% financially included in 2006 to about over 90%, over 93% actually, as of last year, and largely because of the different technologies, bits and pieces in terms of either the models that have been brought about by the fintech entities and even the collaborations between the fintech entities and incumbents in growing these numbers. The other thing that maybe I might highlight in the case of Kenya is the growth in cryptos and digital currencies. From a recent analysis by Chainalysis survey, ranked Kenya as the top world in the country in terms of P2P exchange trend volume, which just speaks to the growing interest in terms of cryptocurrencies and crypto and digital currencies, even when this is a time when the regulator is beginning to have a pulse or feel the pulse of digital currencies in Kenya. We also have other, if I may speak to the specific innovators within the fintech space that are looking at different attributes. For example, we have players like Pezesha, who are just looking at the digital marketplaces and how they might, enhance access to markets for various players. People playing in the what I would call roster for other markets in Kenya that are widely known as chamas, and an example is Chama Pesa, just facilitating that aspect of group contributions and investment opportunities for different stakeholders within the market. So largely, a very vibrant market, if I may say, because, for instance,
Jacqueline, did we lose you? Okay, I think maybe we lost Jacqueline there for a bit. Hopefully she joins back in the next few minutes. I guess to echo what she just said, I think even though we're hearing a lot about cryptocurrencies now and peer-to-peer transfer, I think it's also instructive to maybe take a step back and realize that peer-to-peer transfer and cryptocurrencies in some sense was already quite, especially in Kenya, was already quite ubiquitous, right? In some sense, M-Pesa was precedes innovation of M-Pesa precedes the widespread adoption of cryptocurrency, and in some sense, M-Pesa is a virtual currency, right, on this network. So even though it's not doesn't run on the blockchain, it also has very clear parallels. In fact, probably even better than what we term the things we term cryptocurrencies now. So I think M-Pesa as an innovation is certainly rivals the innovation of Bitcoin or whatever the other cryptocurrencies that you want to call. But I want to also go a little bit deeper into some of the points that you raised, Jacqueline. When we talk about like financial inclusion statistics, financial inclusion is this really sort of term that is used to mean a lot of things, and I want to be able to. I want to paint a clearer picture of what financial inclusion means when DFS or the government or startups say, hey, we're driving financial inclusion, what are they actually measuring? How do countries measure financial inclusion, right? I'd like to take some time to actually talk a bit more, talk about this. Babatunde, do you want to give that a shot?
Well, so generally financial inclusion is, measured by the number of people in the formal financial sector. So if you take in Nigeria now, the percentage of financial inclusion is 64%, which technically is a function of the number of people who are supposed to be, who have been determined to be financially inclusive based on those who are registered on the bank verification network. So that's, and then those who are probably registered in some other non-bank financial institutions, like maybe microfinance banks, or they have been registered through super agents. So that's the general way of approaching financial inclusion. For which I personally probably don't have some disagreement with that. If you take Nigeria, for example, there's no village you go into that you don't find someone who handles the financial system in that community. Is probably, people contribute money every day to him, and the traders in those communities borrow money through him. So they have their own financial system that works. They might not be in the official system. And I think that we've not been able to capture that effectively. And they will not come into the system because for them, finance is about trust. That's the person they trust. They don't want to trust any other person. So how do we bring this person they trust into the financial system? That's what, some of us are still thinking through it. What model are we going to use to bring these people into the system and that way onboard this group of people? But generally, it's about those who are in the formal financial system, people who are, that's how financial inclusion is defined presently.
Is there an alternative definition label that you subscribe to?
Yes. Okay. Should I go ahead or you want to go ahead?
Just go ahead. Go ahead. Thank you.
Yeah. Okay, great. So I think historically, right, in the ecosystem or in the industry of digital financial services, it's been measured according to access in the whole continent, actually in all emerging markets. Financial inclusion has been measured according to access to wallets or an access to a store of value of some sort. But I think the industry has evolved quite significantly beyond access and actually improving the financial well-being of the low-income consumer or improving the financial well-being of the small business. I think what we've seen is that we may say, there's a high, people are included, that they have access to a wallet, access to a store of value, but has their life actually improved? Do they have access to affordable financial services? Do they have access to relevant financial services beyond just access? Right. So for instance, South Africa as an example, it's about 85% financial inclusion, right? So high financial inclusion because everybody generally has access to a bank account in South Africa. But what we see in South Africa is that people receive their salary or their wages into their bank account and then immediately withdraw it. So it's still a high cash society. So they don't necessarily use financial services. They receive their money, but they withdraw all their money and they still operate in a cash landscape. Do they have access to credit? No. Do they have access to affordable insurance, access to affordable services? No. So then are they actually included becomes the question. You take a domestic worker, security guard, as examples, right? Do they have access to grow their businesses or grow their livelihoods? If you think about why the four of us have a bank account, is to ultimately improve our livelihoods, right? Get access to credit to buy a house, buy a car, improve our lives in one way or another. Or as a small business, you get access to a financial service product to grow your business, access credit to buy stock to grow your business, or a business loan to grow your business, ultimately, or insurance for income protection, or credit interest protection. And the question becomes, for low-income consumers, do they have access to that type of service to improve their lives? And I think that should be the question across the ecosystem, that building solutions or products that improve livelihoods, and that should be the measurement of financial inclusion. What is the base that we're currently starting with? And then when we deploy these products or solutions, how have people's lives improved rather than do they have access to a store of value?
That is exciting. Go ahead, Jacqueline.
Yeah, I think if I may just add, I would go with that, but also break that down from access, and then comes usage, and then comes quality, because quality means that whatever is being offered in terms of the value proposition for these financial solutions speaks to the use cases or the need in hand, because we've seen several cases where accounts have been opened, and the reason why globally we are at less than 30% activity from an accounts perspective, and I'm happy that the Global FinTech report is about to come. We're anticipating the latest numbers. That's why I'm not keen in mentioning what the numbers look like, because this is statistics from 2017. But in terms of financial inclusion, it's beyond just access for me, and it's beyond formal financial institutions, because research is proving that they are there's some financial management activities outside of formal systems, and informal instruments are also contributing to financial inclusion. So for me, I would expand that to look at the access in terms of financial services. There's the usage of these financial services, and financial services that are offered in a quality manner such that they speak to improving the lives of people. So again, with the evolution of the space, we are even seeing other additional terms like financial health. So where does financial inclusion start, and where does financial health start? So it's a combination of all these factors in terms of meaningful, accessible solutions that also drive quality in the well-being of people, and even in the way that they're being delivered.
That is really interesting. I think one of the things that I genuinely believe is that if you can't measure it, then you can't improve it. I think one of the strongest advocacies, as FinTech experts that you all can do is to champion, the creation of better metrics for measuring progress, financial progress in financial inclusion, whether that's some holistic index that captures what does it mean to have, financial well-being. What does that mean, and how do we actually measure that so that we can actually, make progress? I'm also curious what the, as a regulator, if you come up with like policies to sort of accelerate financial inclusion, or as regulators, what are some of the elements, what are some of the key elements of policies and regulations to accelerate financial inclusion? Babatunde, do you want to take a stab at that?
I think that, what we expect from regulators should be, for us to have policies that should, encourage financial inclusion. But you see, some of these things have their own challenges. You might have the policies, but there are other factors like infrastructure. Let me take Nigeria, for example. We have a lot of infrastructural issues. In the rural areas, network is bad. They might not have data. Why would a fintech want to go into such spaces? We have super agents all over the place. At times they can't conclude transactions because there's no network to be able to conclude those transactions. So those are certain issues that need to be dealt with. Also, it needs to be simpler. The identity issues, but we're beginning to see some interesting developments. There's a new fintech called Wax Mobile in Nigeria. They have a device that's biometric based. They're already I think they're already operating in South Africa, and they're coming in, and we just need to register using your finger, to capture your finger details, biometrics, and then you can do your transactions just using your finger, and it's tied to your mobile phone. Your account number is your mobile phone number. So that way they don't have to remember pins, they don't have to carry cards, they don't have to, you just need to be there, put your finger, and you can do your transaction, you can pay money, you can transfer, you can buy airtime, you can do also. So we need to have more simpler device, and the device has just been approved by the CBN and NIBS, so they can deploy as agents into the rural areas, and we hope that that should improve some of the challenges we have with financial inclusion or getting people to register and reduce the bureaucracy and all the documentation issues that go with having to open an account. So, but more importantly is that I also think that we need to sell value rather than just wanting people to open an account. So if you take a typical agricultural, community, the farmers are concerned about, oh, if I have a snake bite or a scorpion bite or injuries, how to deal with those things. So if you're selling an HMO service that if you have any of those injuries, you get free medical service, provided that you are buying fertilizer or you're buying seeds or what have you that's tied to it, you probably are selling value to them, which is something that they want, rather than just going to say, we want you to open an account. So how do we make policies that are more inclusive, not just from the financial sector, but looking at the environment, the socio-cultural issues in those communities and tying policies around that, which will need some interoperability between various regulators and not just one regulator to be able to do that. So I think that that's one of the big challenges we have, that lack of interoperability, to be able to look at a more inclusive approach rather than just wanting people to open bank accounts.
Thank you, Babatunde. So policies need to take into account social cultural issues and be encourage interoperability. Also, just as you've mentioned, these policies and regulations need to encourage technology that are easy to use so that they actually do get used. How about Lebo? What do you think? What are some of the elements of policies and regulations to accelerate financial inclusion?
So the first disclaimer is I'm not a regulator. So I'm giving an opinion rather than speaking on behalf of any regulator, whether South Africa or any other country. But what I've seen in terms of some of the work I've done in various companies or even countries is I think regulators need to engage a lot more with innovators. And when they do, good change happens, right? So, not developing or refining policies in silos without understanding what's happening on the ground or the needs of the innovators. So I think what COVID kind of highlighted or exposed is how segregated certain things were and how regulators needed to understand what innovators were doing, right, in order to create more collaboration. So, and what do I mean by that is that, for example, with COVID recovery solutions, people needed, or banks or financial institutions needed to disperse funds for COVID recovery, right? And they were looking for what is the fastest way to distribute recovery grants to either small businesses or low-income consumers, and potentially they worked with financial institutions, but also working with FinTechs who have, the distribution and have access to low-income consumers could have been the fastest way. And in some countries like Kenya, that happened, and in other countries that happened, but in South Africa, they ended up working with traditional banks, right? And why did that happen is because firstly, they weren't aware of the actual FinTechs that are on the ground and weren't aware what they're capable of. But what we saw is that now there's a lot more of that collaboration. So last year, for instance, I initiated a workshop between regulators and innovators in 4 countries, Nigeria, Kenya, Egypt, and South Africa. And one of the findings was the national credit regulators were intrigued of the FinTech startups, what they're doing, how they're doing it, and how they're actually reaching this low-income consumer. And through that collaboration, it was, okay, how can we help you scale, right? What is limiting within our regulation? What is inhibiting within our regulation that is almost restricting you to scale as the regulator? And as more of those engagements happen, I think it's beneficial for the industry at large. Of course, we're seeing sandboxes in multiple countries, which again are a safe way, or a safer way for fintechs to try, test, do a trial and error of their products and get it out there, but in a safe environment. And I think sandbox really help for even regulators to start trusting innovators, right? And as well as for innovators, though, to understand what is the position of a regulator. Ultimately, a regulator is there to create an enabling environment and protect the consumer. Startups, innovators sometimes don't think about protecting the consumer. They just think about developing a great product and putting it out there. And they don't think it's, for instance, credit. They don't think, is this helping the consumer or is it making them worse off? And the regulator, ultimately, their position is, I need to protect this consumer and enable stability in the environment. So those are sometimes, conflicting thoughts, but they need to come together and work together in any ecosystem. And I also think, regulators working across countries, right, in the continent and communicating consistently across countries is also critical for cross-border remittances and cross-border solutions. You have traders in multiple countries in the continent that kind of face the same issues, whether it's growth, access to credit, whatever it is, but, regulators across the continent to work more together to enable cross-border trade or cross-border remittances. But let me stop there.
Thank you, Lebo. That's super exciting. I'm also curious, Jacqueline, do you want to help us paint this picture a little bit about the nexus of financial inclusion and gender and and equality, and how can policies by regulators play a role in that nexus?
Okay, it's a very difficult question because research is proving that the gap is here to stay. And as we speak right now, the gender gap in terms of financial inclusion is at 9%, despite all the initiatives that have been put in place. And I'm beginning to wonder whether, and in fact, this year during Women's Day, there were questions as to whether the initiatives in place are effective. So I would not call this a policy makers problem. I would call this an industry problem where the policy makers together with the stakeholders need to do something to ramp up, and to do something towards initiatives that would contribute to the reduction of that gender gap. And there are several things. We can talk, but a lot is happening, and I hear a lot of people speaking in conferences. But in terms of pushing the needle, I wonder whether this. I wonder when this is going to be effective. Because, for example, there's increasingly the initiatives around deliberately looking for data that is sex segregated. And what this means is just differentiating between the specific needs in terms of both individuals and women-led MSMEs, and using this data as evidence or as a means of informing innovation that would drive financial inclusion and even policy making. So I am yet to see how this translates in terms of the near future or even right now in terms of reducing that gap, but I believe we are, turning the wheel towards the right direction in terms of leveraging this sex disaggregated data, because what this means is it will inform specific process, use case that are specific to women, and how this might contribute to innovation that is particularly for women to also champion financial inclusion for women. And also from a policy perspective, there are other things like integrating gender and women's financial inclusion in national strategies. We are increasingly seeing markets coming up with, of course, national financial inclusion strategies, but deliberately looking at how they can focus on women The focus mostly, whether it's Nigeria and Tanzania, these are the top of mind examples towards that kind of focus. You will see that the policymakers are contributing to identifying the barriers that are causing women to be left behind in terms of financial inclusion, and also identifying how or solutions to these barriers. And the solutions are varied. They could be, for example, policies around allowing agent networks to speak to, including financially including women. We've seen a lot of research around how women agents are helping in women financial inclusion. But again, in terms of impact, I guess this is to be proven, because this is just the beginning in terms of these initiatives. And also just other frameworks that also look into the business models. For example, how might we attract women through channels that are attractive to women? There are pieces of research emerging out of especially sub-Saharan Africa, as to could the processes involved. For example, sometimes there's for signups in terms of access to formal financial instruments, women are required to provide some requirements that they don't have, they traditionally don't have access to. So from a policy perspective, we are beginning to see this across sub-Saharan Africa, and I think we have a long way to go, considering the persistent gap in terms of male and female from a financial inclusion point of view. Thank you.
Thank you, Jacqueline. I also, want to go a little bit, just wrapping up this theme of financial inclusion. What are some interesting, successful models of collaboration between, the large financial institutions like banks, etc., and fintechs? Because when we talk about financial inclusion beyond access into like financial well-being, the startups and the fintechs that are they're very nimble. They can sort of know what the specific needs of consumers are, but at the same time, there's a lot of things in the back end that as a fintech you sort of have to deal with, and there's clearly lots of room for collaboration and partnerships with like the big financial services companies and these startups. What are some examples of some successful sort of models of collaboration between these two parties? Does anyone want to take a shot at that?
I think maybe one question we should pose back to you, Victor, is what do you mean by success? Because is it success in terms of activity, or in terms of access, in terms of number of transactions, in terms of the use cases, etc.? But in terms of the models that I would call them emerging models, because this is still a highly evolving space, we are seeing collaboration between incumbents and fintechs in terms of alternative lending, where the fintechs are improving the efficiency of how lending is happening at the moment. I wouldn't say we have seen success stories yet, because on one hand, alternative lending is improving, but there are consequences in terms of over-indebtedness and high default rates, and the other challenges around digital credit. We're also seeing collaboration perspectives from a payments point of view, where fintechs are facilitating interoperability amongst players, as well as also just providing channels, low-cost channels, that is, because again, this, from a financial inclusion perspective, it's important that access is also facilitated by low-cost channels. I would say that for now, and allow my colleagues to also contribute.
Thank you.
I think what's exciting about partnerships for me is beyond banks and fintechs partnering, because for a while we've been speaking about banks and fintechs partnering, and yes, they partner, right? But I think what Jacqueline was trying to say, undertone was, have they been successful or not is still a question mark, right? So they partner, yes, but some fintechs find that banks can be stifling, quite frankly, or the larger corporates actually stifle their growth rather than improve their growth. And also going beyond the hype and the PR of we are investing in innovation to actually, are we improving the business, right? And where those partnerships are still struggling or challenged by, rather, is developing business models that create value for both the fintech as well as the corporate and the bank. So, when there is a business model that works for both parties, then it works. And we have had some success. So, I mean, in South Africa, I'll talk about case study in South Africa. You have Standard Bank that has collaborated with a company called MobiLife. They're an insurtech startup. And essentially what they have enabled is digital insurance, from application to all the way to the claim process is all digital. And MobiLife has enabled Standard Bank customers to have that service, right? So that's a successful one. Another one is Standard Bank and Merchant Capital. Merchant Capital offers loans to small businesses and really enabled Standard Bank to have a service that enables small businesses to access loans and alternative scoring, using alternative scoring and other alternative ways to access that credit. And then it has enabled your almost Standard Bank to then offer a service to another market that they deem as risky, but the startup has then solved for that, right? So you do have some models out there that are starting to work and are starting to grow. But I think what's more exciting is startups partnering with each other. So as you see a lot of investments going to mostly payment startups, but the fintech industry in general, that a lot of them are now starting to acquire startups to grow in other markets. And I think that's exciting, where you're seeing fintech startups partner as well as acquire and work together and leave almost the large players alone and partner together to then get scale.
Yeah, that's exciting. At the end of the day, as you mentioned, cash is the competition, right? So when startups realize that, hey, the market is so big and can actually contain a lot of us, and really the competition is cash, and people getting the salaries and withdrawing cash immediately, then the need to collaborate and to work together becomes more compelling. I want to shift a little bit, because I think we've touched on this quite a lot in our conversation. We've touched on credit and identity, and around, when you talk about credit, you have to talk about just like identity, and you have to talk about data. I think one of the things that I see when I was observing the spaces, as these companies, as fintechs sort of innovate and build these technologies, they often just want to solve the problem, right? So I want to be able to give a loan to an SME or to a consumer, using what you call alternative data. But obviously, this raises a lot of questions around, okay, what are the regulations around how you manage that data? Where's the provenance of the data? How is the consumer involved in the way like you share that data, and things like this? How do you make sure like people's identity is protected? And even the biggest financial services companies, they still fail in very many ways in like protecting consumer data. So I guess my question there would be, how should fintechs be thinking about consumer data, and why is consumer data particularly important on continent? Consumer data privacy particularly important in continent. Babatunde.
Well, data is it's very important. Data privacy is very important, and even right now in Nigeria, we already have regulations regarding that to ensure that data is in privacy of consumers is well protected. I also think that with the open banking regulation that's been released right now, it will help to also deal with issues of privacy and now gives the consumer the power to give authority for his data to be released. So I think that that is a solution to being able to ensure that data can be exchanged and at the same time the privacy of the consumer is protected.
Yeah, the CBN actually just, I think sometime last week or maybe this week, just recently released a circular on open banking in Nigeria, and I did go through the document, and it's very well thought out. I'm very excited for how that's going to play out in the space for sure, because I think there's a lot that when we talk about well-being, there's a lot that we can enable, as regards financial well-being when people are sharing data, when at least it's easy for fintechs to access and manage data. Label, do you want to add to conversation here?
Not really. I mean, I'm not a data expert at all, but I mean, I guess why is it important? Because I think part of the challenge of growth of anything in the continent is because no one really knows the numbers accurately. We speak about, there's so many small businesses and informal traders that need this and that, but the numbers are in the air in a way. So if we could do better, all of us, to actually get that data, right? Collection of data, never mind, just collecting the data, right? And then gathering insights and then, attaining value from that data, right? I know your question was about privacy, but I think from a data point of view, just collection of data and accuracy of data, I think is one thing that if all innovators, whether it's a startup, a corporate, whoever it is, invested more in the collection of data, then we can do more with it, right? That's all I'll say.
Jacqueline, any thoughts? Any thoughts around, maybe how data is enabling new business models in Kenya or in East Africa in the fintech space?
I think there are a number of things like label. I'm not a data guru, so I'll just speak to what I'm seeing at a high level. In terms of data enabling new business models, of course, we are seeing players leverage data, whether institutional data or market data, and from market data, Kenya, it's reports by the FSD, which provide a little detail in terms of the demand side behaviors. And out of this data, we are seeing it contributing to product development, particularly for various segments. And also from whether institutional or data from alternative sources like social media or any other available platforms, because we're living in the internet age. This is also driving innovation and even improving processes. For instance, we've seen cases where institutions are collecting the data on customer constraints and using that to develop recourse mechanisms where
Yeah, looks like we lost Jacqueline again.
Finding ways are able to interact with the the FinTech.
Okay, while we wait for Jacqueline to join. Okay, hey Jacqueline, you're back. Okay, I think we lost you for a bit there.
Yeah, I'm somewhere. I'm sorry, I'm somewhere very far from civilization, so I guess that's what is
Wow.
contributing. Yeah, but I was just concluding by saying, we've seen, various avenues in which data is being harnessed. Most important thing is to just identify.
Okay, so maybe I can hear Jacqueline. So I was actually curious, Babatunde. Do you want to talk a little bit more about the FinTech Association of Nigeria, and for potential FinTech founders listening in on the conversation, or investors listening on the conversation, just painting a picture of like what are some of the core initiatives of FinTech Association of Nigeria?
Yeah, thanks, Victor. So, I mean, for us as an association, we're driven by three core objectives. The first one is to be able to connect everyone within tech space. And that's why we have an inclusive association. Currently, we have 21 different sectors represented, from the incubating banks to payment fintechs, lending, and the verticals, and so that we can work together and grow the space. I mean, we drive that by various initiatives, various programs to be able to create that network. We have a social program. We have the Nigerian FinTech Week, which is our flagship event, which holds once a year, the last week in October. And we also have other events, awards, events, and what have you. And then we have Accelerate, being able to champion technological growth, and we believe that can be done through capacity building for regulators, operators. And last year we did a survey together with EY, and one of the things that came out across all the sectors was the fact that there were skills and talent gaps across board. We have a lot of fintechs here who are paying developers based in different parts of the world. So how do we grow their skills and talent? So the program we have now that's called the DigiQuip series, which is like digital equipping. So we have what you call the DigiStuds, which is digital students being able to intervene at the universities level and train students. So last year we did 214 students from 29 different universities on web design, graphic design, and Python language. This year, we're scaling that to also include data analytics, and the second set just started. We're starting another program called the DigiCorps. We also realized that one of the lessons from that pilot scheme is that they are not ready for work. They're just students, but we're equipping them to understand what digital transformation is all about, create that excitement in them, and they need to be creative. So we have DigiCorps, which targets those doing the national service who are preparing for work. And we're starting that this year. We're already talking with the National Youth Service Agency to be able to say we can deploy that. And then we have DigiSkills, which looks at organizations who wants the people to acquire specific skills, or people who are working who just want to learn about specific skills or certifications in some areas of FinTech. So those are three things we're doing in terms of equipping and building skills. The last one is to be able to advocate, being able to ensure that we can work with regulators, that policies and frameworks that come out support innovation and creativity. Now, innovation is always ahead of regulation. How can we bridge that gap? We believe it's by engagement. So we have a forum that's called the Regulator Forum, meets regulators and innovators. We meet quarterly, and all the regulators have representatives at director levels who attend this forum, and the operators are there. We can talk about issues, discuss them. It's still a very young forum. It's just about a year old, and we hope that it will go to a stage where policies will actually be defined on this forum. The regulations are defined, and we can implement them. In terms of and that has helped the relationship with regulators. There's nothing the regulators do that they don't discuss with us. I mean, asking us for our inputs in them, not necessarily that they might accept them, but at least they ask us. I think, which is a good development as against you just wake up and then you see things happening. So for us, and I think that that's also helped the landscape, and that explains why there's a vibrant fintech ecosystem here, and we hope that this year we get 2 or 3 more unicorns apart from the ones that we have. So I think that Nigeria is a destination point for investors. We've got talents, we've got people who are innovative, we've got the drive, and we've got the people. So I think that if the investors, Nigeria is a place to look. The fintech space is a place to look at.
Interesting. You're definitely working. The work you're doing touches goes beyond the fintech space. With talent development. And I think the battle for talent is the fiercest battle that startups have to face today, actually, on the continent, interestingly, because now they're even competing, which it's good, but startups are competing with the big tech companies that are coming to set up development centers on the continent. So we need to think of new ways of accelerating talent development, certainly. And Nigeria, the regulatory landscape in Nigeria is, especially in fintech, can be very strange. Especially like there's a whole chat about how like CDN can just wake up tomorrow and say something that throws everyone into disarray. At least they've done this in recent times with like the cryptocurrency regulations and preventing startups from being backed by cryptocurrencies. So it's definitely useful to have someone who at least is in the ears of the regulators, for sure. Lebo, do you want to talk a little bit more about what are some of the frictions to scale for fintech in South Africa or in some of the countries where you worked? What are some of the frictions to scale?
Okay, I think one of them is capital. So as much as there is a lot of capital globally that is going to fintech in general, but access to capital for early stage is still a challenge, right? That's one, when you haven't necessarily proved product market fit, and when you don't have access to family and friends. So accessing that capital can be a bit challenging. The capital to test your product, to prove product market fit, to get access to customers. So that's one. But actually capital for growth stage startups is even more of a problem. So VCs that are a lot of VC funds, whether it's globally or locally, who focus on early stage or focus on large scale, right, which is then private equity. But growth stage startups also actually struggle to access capital. Where some funds say they're too small, the private equity guys will say they're too small, and then the VCs may say they've passed our point, or we don't like them, for whatever reason. So access to capital is still a challenge for scaling. And then another thing is, I think, commercial business models. So you see a lot of fintech startups building great products, and maybe the product is not there or is needed, and the technology is great, but is it commercially viable? Is it sustainable? I think that also has then affected scale from are these business models commercially viable, but also are they sustainable, right? So it may be trendy, it may be cool, and you may get investment because you're telling a great story, or you are fulfilling other things from the funders. But from a scaling point of view, it has to be commercially viable, right? So are you actually providing value for your customers, and are you providing value for many customers, and can you get repeat customers on a consistent basis, right? That has affected scale of some startups, and then I won't say regulation because that's an obvious one, but yeah, in terms of cross-border, but that's another conversation altogether. And actually, another one I think is team. So what you see sometimes is that great founders, or one or two great founders, but the rest of the team may not have the expertise for scaling a business, right? So growth and expansion is different expertise to building a product or building a platform. The skills and the expertise and the team you need to build a platform, build a product, may be one thing, but to scale the business, to develop systems and processes that will help the business scale is different expertise. And getting access to that talent, I think, is also a challenge for fintechs.
Interesting. Do you think that the way investors should be looking at these startups, when we talk about capital being difficult, maybe investors don't just understand, because the models of total addressable market, when you write your pitch deck and you write, this is the total addressable market of what I'm building, their models it doesn't align, right? Maybe partially, do you think it's partially because even on the continent, this markets actually have to be created? A lot of the businesses, that would potentially be great, businesses in fintech space, they're targeting, non-consumption in some sense, and they're creating new markets even. So the total addressable market is being created as they build the business. Do you think this is the case with many fintechs, and why investors might be a bit hesitant to invest?
I mean, you see, this total addressable market thing, when you do it based on Google research, it becomes big numbers, right? I'm going to reach Nigeria, the whole of Nigeria, right? But the how is then the question, right? How are you going to reach 100 customers? Let's just focus on that. How are you going to provide value for 100 customers and get repeat usage from 100 customers, and focus on that and get them to love your product, use it, tell other people about your product, rather than focusing on this big addressable market of how I'm going to reach Africa, which, then when a pitch deck says all the Africans are going to acquire my product, or even let's just take Nigeria. All the Nigerians are going to take my product. And I'm saying Nigeria because it's such a big market, right? So it's easy to speak that language. But how are you going to do that? How are you going to adopt those customers? Because customer acquisition is a high cost, and investors are aware of that. So how are you going to do that? And how are you going to sustain this business model to reach all Nigerians? And I think there's sometimes that disconnect, but also a disconnect that sometimes investors want these big numbers and want the scale story, and push the entrepreneur to speak that scale story. But I think the focus should be, how am I reaching 100 customers and adding a lot of value to 100 wherever, in whatever country.
I see. So yeah, so you're saying the market exists and the investors sort of realize that the market exists, but entrepreneurs are not doing a very good job of going from, so okay, we know this market exists, but how do we get the first few sort of customers, and what's the plan to scale beyond that? I see. Awesome. So I've got a question from the audience. So someone's asking to recommend resources to read or watch for someone interested in knowing more about FinTech without being weighed down by the jargon. Does anyone have like a newsletter that they subscribe to that they recommend, or books, how to think about financial innovation on the continent? Well, I can suggest that, you know, I make sure I read Tech Cabal's articles and the newsletter. There are also really great people who write a lot about the continent. Yeah, I think in some sense, Tech Cabal is like one of my biggest sources of information about FinTech on the continent. Obviously, you know, TechCrunch is also starting to cover the continent a little bit. Obviously, there's Disrupt, but a lot of it is kind of biased towards just like fundraising. And on Twitter, I guess there's also, you know, following founders of these FinTech companies also like to talk about what they're building. And, you know, there's a lot of activity on Twitter that gives you a sense of like what's going on the continent. I do think in some sense my Twitter is biased towards Nigeria. I think there's a lot more interesting FinTech companies outside of Nigeria, even though Nigeria gets a lot of the, you know, the the media attention. And I'd like to see, you know, I like to see like the next unicorn be a non-Nigerian FinTech, actually, just to, you know, put the spotlight somewhere else for a bit.
Can I comment on what you've just said in terms of you'd like to see the next one be non-Nigerian? Just a comment that I think why the unicorns have come out of Nigeria, and a lot of let's call it attention has been going to Nigeria, is that what I've found is that Nigerian startups and Nigerian founders, when they build a company, they build not just for Nigeria, right? Immediately from the beginning, they want to take over the continent. So from the day one, when they build a startup and build a company, it's for Africa, by Africans, and it has a takeover sort of mandate. And you can see it in how they build it, how they build a platform, and how they ensure that we want to scale as quickly as possible. Besides the fact that Nigeria on its own is such a big market, right? Just solve for that. You already have such a lot of scale. You know, that also helps. That's why VCs and funders are so interested in funding just even Nigeria. You capture that, you capture so much. But also Nigerians just, you know, whether it's culture, whether it's attitude, whatever it is, has that takeover mandate of I'm building for the continent from day one. You know, for instance, I think, you know, if in other countries, I'm not going to mention countries, that if, you know, people built for Africa from day one and with that mindset, I think would then see more unicorns in other countries as well. You know, so for instance, build for East Africa from day one, right? Rather than Kenya, build for Africa from day one, rather than just South Africa. I mean, South Africa as a market is a very small market, quite honestly, when it comes to the numbers, right? So building for scale from day one, I think Nigerians do that quite differently. And they're aggressive by nature in terms of taking over the market quite as quickly as possible. Just
I think I'd like to also play the devil's advocate in that, because I think there's a lot of hype that is being driven by the fact that people or institutions want to be unicorn, but when it comes to impact and what innovation is being driven into the market to solve whatever problems that Africa has in terms of payments, it is still wanting. And a lot of these organizations that they're going for the valuation to determine the business. And I think there's a whole lot that can be done if, you know, use cases are considered, because for instance, you can be hungry to get out to another market, but you still haven't addressed challenges at home. And I look at Nigeria as a very big market. I even suspect Nigerians are more than 250 million. And I have these conversations with my colleagues every now and often. I think let's also have this also consideration for, I mean, some consideration around not only being biased to the unicorns of this of the continent. And I'm not complaining about Nigeria. I love Nigeria very much, but yeah, we can't be talking about high exclusion rates when you have big players exporting the same solutions to other markets. I think it's something that we could maybe just take a step back, go back to the drawing board and see there's much more potential, even from within and moving outwards. I know there's, from the onset, there's the interest in terms of being the African champions, but also it would be useful if they can deliver the same at home and export that as well.
I agree. I totally agree. It's actually hard to pinpoint, startups that have really cracked the code of going, from where they were born and scaling across the continent. Even though there's a lot of regulations, the African Free Trade Area, and lots of things to enable, and technology is borderless in some sense, right? So from a technology perspective, but clearly we've not really seen a lot of, we've not seen that many, even across the continent. Maybe they started in South Africa and then they moved to Nigeria, started in Kenya, and then they moved to Ghana or something like this. They're not a lot yet. I think probably one of the biggest success stories when I look at the continent is probably MFS. MFS Africa, I think, has done a terrific job in just scaling across the continent. And yeah, maybe we should have Darry write a playbook on scaling across the continent. How would you sort of approach this? How would you advise sort of startups to think about, okay, yes, you should make sure like the market where you started, you've actually solved the problems and maybe not chase valuations as much, but fintechs that are looking to, they've sort of figured out that this is a pain, and they've sort of captured the market in the countries, and they want to scale to a different country. How should they approach this? How should they approach like partnerships in these countries across the various stages?
I think it's a difficult question because it depends on who you're asking. But I would say the market is largely being influenced by the lots of attention in terms of funding. I know I also sit in a few boards that, it's all about where the money is, and it's not about, okay, so what sort of business are we trying to build really? It's not even about what sort of transactions are we trying to drive, and by transactions I mean chasing the use cases and actually building the frameworks around a business. But again, I feel that it's not going to be for long, because eventually investors will begin to realize, okay, so there are other variables that determine where to go and how to go about it. But for now, I wouldn't have an answer for what should we tell these organizations, or how can we attract this kind of use case chasing, because as it is, money is talking, and there's a lot of attention in Africa because of the potential. I see a lot of nice speeches around how we are going to capture market X in terms of the numbers, but it doesn't. Once the funds come in, the story changes to a differentiated approach. So I don't have the answer, and I wasn't answering the question. I was just throwing back another question on top of your question, Victor. That money talks.
Yeah, true. That's true. Babatunde, do you have any thoughts on this.
Okay, thanks. I think let me start with the question that was asked about the book. There's actually a nice book called the FinTech book, written by Susan Chisti and Janos Barberis. It's a good book that the person can read. Going from where Jacqueline stopped, so I know investors says that there are three things that are important to us. The first one is profit, the second one is profit, and the third one is profit. So when an operator is faced with that, you start to look at where am I low-hanging apples, where am I going to make money from? In terms of Nigeria is a peculiar situation, and some of the challenges that fintechs have might not really be that the fintechs don't have the solutions, but it's because the infrastructure to be able to deploy those solutions are not there, which are the things that I mentioned earlier. I mean, we saw Jacqueline has gone off like thrice. It's not because it's because there are network issues, you know. So there are a lot of infrastructural issues that need to be dealt with. So I'm a fintech, I have a fantastic solution. I mean, I know a fintech who has this solution software that does language translation, which will probably work well in rural areas. But then why will you want to go there? Because the cost of doing business is high. That means you need to have a generator, you need to buy diesel. The price of diesel has gone up by 400%. You need to, so how do you survive? So there are infrastructural issues that have to do with government that needs to be dealt with. And that's why, look, the operator, they will look for low-hanging apples. Let me face those areas where I can make money. So from day one, I'll do Nigeria, where I can capture business. I'll go to Kenya, I'll go to Malawi, I'll go to this. So those plans are there. I mean, so in terms of solving local problems, I think that we have enough people to be able to solve our problems locally, but the infrastructure to support that is what doesn't exist yet. So there's a lot to be done by government, and that's why, you know, when we talk about AFCFTA, it's fantastic, but then there are questions I've asked. So Africans will export raw goods and import finished products. So who is Nigeria going to export its raw goods to within Africa? Cocoa, rubber. They don't want that. They want tires. They want finished cocoa products. So we need to develop industry, and to do that, we need to solve infrastructural problems. So technically, Nigerian manufacturers do not have comparative advantage when it comes to export, because the cost of production is huge, because they run 24 hours on diesel. You know, so you have all these challenges that we need to deal with. So I mean, I think that we can't blame these fintechs when they're trying to do what's it called. I mean, Jacqueline, we've not been able to solve cross-border payment. We can't solve cross-border payment for a long while, because the strengths of African countries vary, and there's no way you're going to do cross-border payments without looking at the reserves of a country. So if no CBN is going to allow free flow, and just wake up one morning and your reserves are gone, you know. So, well, I think that we can start from somewhere. So the central bank in Nigeria says that for African trade, we're putting down $1 billion in reserves. We're putting, what's it called? Let South Africa say we're putting down $2 billion. Let's Ghana says we're putting down $1 billion, you know, so that the SMEs know that if I do trade, I can get my money. And that's the only way we can even collect data. For example, if Nigeria says $1 billion and in 6 months we've exhausted $1 billion, it means that the trade within Africa is beyond, Nigeria and other parts of Africa is beyond $1 billion. But we don't even know the exact figures, because a lot of the trade that occurs happens behind the scene. I mean, I want to pay somebody in Kenya today. I go to the black market and buy dollars and find a way of transferring it. It's not through the official process. So we need to be able to have data, which is what we don't have. So we need to put money where our mouth is. I think that the problem of Africa is political will. Everybody is protecting their own interests. If we can deal with those political wills issues and put money where our mouth is, we want to do this is how much we're putting down. So it's not fluid, you know, and let's see things, I think that would change. I think that would change the color of things a bit.
Awesome. Thanks, Babatunde. So two questions before we wrap up. The first one is from the audience. So we have someone asking that, what are the chances for a new tech company in Africa to expand its market, not only on continent, but also internationally level? Do you want to take a stab at this?
What are the, sorry, what
are the chances? What are the chances of a
Okay.
tech company in Africa? What are the chances to expand internationally, not just the continent? I know that there's some, interestingly, there's some startups, well, not startups now anymore, but like companies that, as opposed to like expanding across the continent, they actually look outside the continent. So for example, Paga, for instance, wanted to expand to Southern America, sort of like expanding the continent at some point, maybe Tala as well. But what are your thoughts on this?
Yeah, so South Africa offers a unique opportunity because it's a parallel economy in a way, highly developed as well as developing. So highly developed financial services, highly developed financial services infrastructure. So what we've seen is that a lot of fintechs in South Africa actually expand to other developed markets rather than the rest of the continent. So that's exactly what we've seen in SA. I mean, you have companies such as FinChatBot that has expanded to the US and Mauritius. And so a lot of fintech startups here, as they grow, they actually grow to the UK and US because those markets have similar infrastructure and similar environments. So fintech startups here that are developing for the high-end consumer or the urban consumer tend to grow out to other markets beyond the continent. So that's quite common in South Africa.
Thank you. The last question is, with the exception of Wave in Senegal, so I think Wave, one of the, I think last year, or maybe early this year, they became a unicorn and started in Senegal. There's not a lot of activity, or maybe I'm just not exposed to a lot of activity going on in the fintech space in Francophone Africa. Jacqueline, Lebo, do you guys have any sort of experience working with startups on the continent? What are on that side of the continent? What are some of the challenges that you think would explain this gap?
I think I'll pass on that one because I'll most likely be sued.
I mean, you are seeing a lot of activity. So you're seeing a lot of activity in Senegal. You're seeing a lot of activity even in Côte d'Ivoire. So you are seeing a lot of activities of investors going to Francophone countries because it's been almost virgin territory for a long time. And the opportunity of Francophone countries is that regulation, I forgot what it's called, but there's a regulation where essentially it's one currency, right? That works across the different countries in Francophone countries. So that becomes an opportunity on its own that you can build one for multiple countries in Francophone markets. So you're seeing a lot of that. You're even seeing VCs such as PeertoPeer, have their offices in the Francophone market. So the minute VCs are stationed there, that is signaling something. So I mean, even there's companies such as Matontine, which is a Senegalese company that is essentially built a platform for credit savings and credit unions in Senegal, much like the savings groups that Jacqueline was referring to. So there are those type of solutions also in Senegal.
Great. Well, thank you all. This has been a very delightful conversation. I've learned a lot. Spoke about financial inclusion, spoke about data partnerships. Spoke about lots of really interesting things. Do you guys want to give parting thoughts and to the audience, to fintech operators, potentially, if they're regulators that are listening on the call, investors, if you want to give a quick parting thought. Babatunde. I'll start with you.
Well, I mean, just to say that, I mean, it's the fintech ecosystem. It's a young ecosystem in Africa. The potentials are huge. Operators and regulators need to work together to grow the ecosystem. It's not us versus them. It's actually working together. And I always tell operators, we're not fighting regulators, and we're supposed to work together. I mean, they might have their reasons for taking decisions, but then at the end of the day, we're all working towards growing the economy. And I think engagement is what's going to solve this. I mean, with this, the generation that asks why, regulators don't like to answer why. So we need to find a way of bridging that gap and then being able to work together and grow the ecosystem.
Thank you.
Okay, I'll keep mine short and sweet. To the entrepreneurs in the audience, to take into account that ultimately your business is for a consumer, your investor is the consumer. You know, a lot of entrepreneurs focus on raising capital and focus on investors, but ultimately, does your business have a paying customer? And if it has a paying customer and more paying customers, then there's a business. If not, then there is no business. So focus on attaining customers, paying customers, rather than raising capital only.
I think my parting shot also goes to the fintech entrepreneurs in the call. Mine is just to focus on being part of the conversations within the markets with regulators. I encourage them to, you know, throw themselves deep into conversations around innovations in the particular markets that they're operating, as well as contributing to policies and finding ways to ensure that they comply. Because again, you can do everything you need to do, but if you're not complying, if you don't have that relationship, if you're not part of the stakeholder engagements with the regulator, you'll not go a long way.
Well, thank you so much, Jacqueline, Lebo, Babatunde. This has been a great conversation, and I'd hand it over to to Caleb or Adji to take us to the next session. And thank you for your time. And hi, Adji.
Hello, thank you all so much. This was so educational. I learned a lot. Thank you for allowing us to hear your thoughts on this topic. And thank you, Victor, for your awesome moderation. Next, we will have a small break before we move on to our lecture on Pan-African history.